Welcome to The Investor, a podcast where I, Joel Palafinkel, your host, dives deep into the minds of the world's most influential institutional investors. In each episode, we sit down with an investor to hear about their journeys and how global markets are driving capital allocation. So join us on this journey as we explore these insights. All right, so excited for my guest today. I've got Scott Estill. He's a managing partner at Lancor, running their New York office and co-leading North America. He shaped his career around supporting private equity, family offices, and portfolio companies through executive recruiting, deal origination, and value creation. So I think that's a huge piece too when you're trying to, fill a role, whether it's a CIO, an associate, a principal, just going beyond just placement, but maybe being a super connector, building a community around those people. There's a couple bigger executive firms that I've met that have hosted breakfasts in the morning, and I feel like breakfasts are a great way to get people together and share notes, share ideas on the market. So I think just going beyond just connecting people, building the platform overall, I think is really helpful in my opinion. But we're going to go deeper on that. But especially now with boards facing tech disruption, AI risks, and leadership transitions, Scott has been in the trenches helping investors map executive C-suite moves and make or break outcomes, all while juggling fast-changing mandates in multiple industries. And Scott, you bring in frontline clarity on how boards are now running outside of advisors, and succession planning is super important, especially for single family offices, because the second generation, the third generation, they may not even have an interest in being involved in the family business. So really thinking through how they can kind of continue the legacy, preserve and grow the wealth and hopefully compound the wealth is in my opinion something that's super important. And one of the most overlooked risks in private equity is the skills that define the next generation, right? Those backable leaders. If the CIO is now kind of slowly thinking about retiring, should the CIO just hire their son or daughter, or should they hire the right person? So that's kind of a super important thing to talk through, which I know we're going to go deeper on. And just managing those complexities. Scott has also taught at a couple Ivy League schools, active on industry boards, and shares highly actionable real world stories based on what he's doing in the real life. So Scott, hopefully that was a good bio. And maybe you can just kind of say hello and just start with your background, kind of your early education, what you thought you would, get into in your industry and how that got into executive recruiting. And then, let's kind of go deeper on the learnings that you've learned across venture, private equity, and what people are looking for now when it comes to talent.
Yeah, listen, happy to do it. And, the old joke is the problem with experience is it takes time. So yeah, happy to dig through how we got to where we are and, how we're trying to create value, because things are changing quite a bit in the world of private equity and family offices and family-run businesses. So we'll dig into that. But the background is, as you alluded to, I spent most of my life, unfortunately, perhaps, as an investment banker, right? It's one of my many shortcomings in life, as they say. But the reason I say that is that my frustration with traditional M&A is that you would take two companies in the same industry, in the same size.
Sure.
And 4 years later, one's a 5 times your money and one's a 0. And you say, well, wait a minute. Everyone told me all the answers to life are found in Excel in a bank anyway. So why is one company in reality so much more successful if the numbers are penciling out the same? And if you do the regression on that question, it's almost always about the management team, surprise, surprise, and their ability to pivot and transition during an ownership period to generate truly differentiated alpha, as opposed to just financially engineering your way to a return. So I'm sure most people and listeners will say, yeah, of course, operations trump financial engineering, but that's a hard pill to swallow for a banker who thought all the answers were in Excel. So that's one pillar of the model for us as a firm. Where does real value reside? Operational insight. And then the other pillar has to do with the bad math in traditional search. It stemmed from a conversation I had with folks at Heidrick where they're like, listen, they're trying to get you to take job A. You don't want it usually. And so at the end of one of these conversations, they're like, listen, I get, Scott, you don't want this job that I'm trying to get you to take, but you should join us at Heidrick.
Mm-hmm.
And I said, no, that's a worse idea than the first one you were trying to take.
Sure.
How can I do it all? But what I heard him say, and this will quickly come full circle, is the problem they have is if Apex or Advent or Warburg or GTC or Carlo, all great firms, are looking for a new CEO to run a business, you reach out to 100 people, more than half of them don't want the job. They're just curious about what's going on in the market. And I said, yeah, that's consistent with my experience.
Mm-hmm.
And of the remaining half aren't moving to New York, New Jersey, California, Cleveland, Texas, London, pick your location around the world. So the pool of people that are both good and actionable on a regular search, it's like 5%.
Yeah.
And so I said, all right, listen, if that's true, respectfully, you all have a bad business model, public traded company. Here's what I would do if I were you. Why not reach out to these same folks and say, listen, on the one hand, I'm calling you because I'm looking for a new executive. And if you want the job, lovely. But if you don't, why don't you, A, keep your job the same? Because whatever you're doing it well. That's how I got your name. 2, let me introduce you to these private equity shops, not when you're looking, but when you're not.
Sure.
Leverage. 3rd, you can co-invest. That's of interest. 4th, you get equity. That's how you make real money. 5th, you can join the board, all while keeping your job the same. And 6th, maybe you do want to be a buy-in executive. Fine, but you don't have to change your job to create an awful lot of value.
Yeah. If you're joining a board, how many hours a week? If you got a full-time job, you're maybe a COO or a VP at a high growth company. If you want to do, kind of board work, what are some of the benefits with that? I guess, can you get some, income on the side,
Sure,
as a retainer? And then I think on top of that, could you possibly, I guess, how much time, what are the demands of kind of being a board member? I guess, how often do they meet for the audience here?
I'll make some general topics because the point there is, and they're all true, of course, but, 2 big buckets of publicly traded board members and private equity backed board members, right? Mm-hmm. Different animals. The upside of the private equity backed boards is you're getting often a meaningful equity slug. Mm-hmm. So that's how you're going to make your money. The point about what I was going through was all the executives who run company A but used to run company B, they're not conflicted to work on company B because it's not the same subsector, right? Often. Yeah. So then how do you leverage the muscle memory and the scar tissue to sort of help get more return? So your day job, which may be PE-backed, maybe gain equity, whatever. It could be public, doesn't matter. It could be private. But if you can leverage in a non-conflicting way what you've learned before, because most private equity firms are, they have a bunch of finance nerds like me. They're not operators necessarily. Mm-hmm. So board members getting paid cash, of course. They're getting paid their travel and for their time and all that stuff. 3rd, they're getting equity. So you can make millions of dollars in equity in these roles by being a board member. Now, there's 2 buckets of board members. One is independent board member, and one is a chairman of the board. So chairman, you're doing more work on a weekly, monthly, quarterly basis. You're getting more cash, and you're getting more equity. But it's also more of a time commitment. So, and you can be on 2 or 3 or 4 boards, right, depending upon what your current reality is. But chairman of the board, it's hard to be, on 2 or 3 chairman of the board because that just takes a lot of time.
Yeah.
So, but they both provide equity. They both provide cash comp. They both provide an ability to create value in a non-conflicted way. That's the key thing.
And then if you're on the board, I guess, what are some of the responsibilities for the audience? Let's say you've got a full-time job. You're a CMO at a high growth, growth equity backed startup. Yep. They're making about 100 million in revenue. So you're probably making 400 grand a year as a, CMO or something, mm-hmm. right? But that your specialty is supporting people and getting them from $1 to $10 million in the next 2-3 years, right? So that's very valuable. But you got a family, you have, obligations. I guess what would be some of the responsibilities of like a side hustling board member?
Well, I think to your point earlier, I mean, you have to be precise about mm-hmm. You can't have 10 number one priorities.
Yeah.
So what are the 2 or 3 things that are trying to be solved in the next 2 to 3 years?
Sure.
Right now, one big bucket could be AI, which is first and second and third on everyone's mind on a board at the moment, right? And it probably will be for a while because
Sure.
everyone knows they need to be thoughtful about what that means, but what does it really mean? So the point of that is when you're on a board, the management team is good at many things. They're rarely good at everything. None of us are perfect, right? So the point is I'm bringing, whether it's marketing chops, whether it's AI appreciation, whether it's solving technical debt, whether it's thinking about the go-to-market motions, like what are the things that you've done as an individual and an operator in the past that you could bring to bear for this company? Because the management team needs, by definition, they need support around some of those 2 to 3 pillars on the investment thesis.
Yeah.
And that's the point. Listen, I've stubbed my toe. We all have dozens of times. How about we do that less in this portfolio company or this, it could be a PE backed or it could be a family owned, but this company, how do we see around corners better? How do we make a couple fewer mistakes based upon what you've learned? And that is the point of a board, because the CEO and C-suite generally, but specifically CEO is a lonely job.
Yeah.
And so you're supposed to have all the answers. Well, it's hard to have all the answers. So having an independent board who you can bounce ideas off of, incredibly helpful to make better decisions.
No, that's interesting, and I don't know if you've seen the show Succession, but that's a good crash course, that show on I think it was Showtime, in terms of how board members could be involved that are part of the family, and people could get voted off the board. I mean, I think the children were trying to oust out their father. So walk me through kind of some things to be aware of, and kind of how governance is super important when it comes to structuring a board and having a cadence, right? There's obviously meeting minutes and there's decisions and voting that happens. So would love to hear some examples or reactions to that. And I mean, obviously everything on TV is much more theatrical. We had a hedge fund manager that came on, and we're both fans of the show Billions and Industry. I don't know if you've seen those shows, but the hedge fund manager, she was like, look, even I worked in Connecticut at one of those types of funds, and billions of dollars of assets under management. And, what you see on TV is nothing like what actually happens in real life. So we'd love to hear your reactions to that.
Well, whether that was based or wasn't based on Stephen A. Cohen, and whether it's a Succession, they need to sell advertising dollars, but there's elements of truth in all those shows to what's going on. The people may not be as beautiful, but the some of the issues are the same. So listen, the question is, what's your day to day, and what's the need, and how do you think about governance? At the end of the day, if it's a company, you got to figure out who owns it. Now, technically, the board runs the company technically, and the CEO, he or she, works for the board, and is working until the board says you're not the CEO, unless who depends on who owns the equity. So it's a founder CEO, that's a different animal than a hired individual running the company. So all things depend on the capital stack and who owns it, and that's who has the juice on making those decisions. Now, that being said, I would argue historically private equity boards were filled with the investing professionals who did the deal, because you have a fiduciary obligation to, make sure the company grows. That's why the LPs gave you the money in the first place. Okay, fine. But I think the most underutilized arrow in the quiver of private equity is independent board director, because listen, if you're the partner at the PE shop, you own the company, full stop. Of course, you have to be involved, but maybe someone who has more experience on issues A or B or C should be on the board as an independent board director, and not using all those seats for people that are already in the private equity shop. And when people do that, they just get better operational insight. So I was on a panel last week, and one of the guys from Bain, and Bain is saying, hey, listen, 12 is the new 5. What the heck does that mean? Like back in the day, 20% internal rate of return, IRR, and a 2 to 2.5 MOIC, plus or minus. The math would suggest you have to grow at 5%. Okay, fine. to get those returns. Those are good returns, not amazing, but good. Now, today, you have to grow at 12 to get to the same return that you used to be able to get at 5.
Yeah.
Why is that? It's because purchase price multiples, that the delta there is smaller because people are paying borderline irresponsible purchase price multiples for companies.
Mm-hmm.
Debt's not free. So the lever to pull to get the returns you need and what the board needs to be focused on is growth. Cutting costs isn't easy, but it's a lot easier than growth. And so some of those levers that used to be easy to pull about cutting costs and, levering up a company, paying down the debt. Well, everyone's gone to the same business schools effectively and figured out how to do that. That's table stakes. The issue now that the boards need to focus on is growth. And the way to do that is operational insight.
Mm-hmm. Go a little deeper on that. So operational expertise, excellence. What have you seen with some of the best turnaround guides that you've seen have been done? Besides just cutting costs, it's all about the people, right? So what are some things that you've seen with, the people, the systems, obviously technology, right? AI is going to automate things, but then there's also new costs to pay for the AI and development and integration and transformation. Yep. So walk me through, or just tell me a little bit about your reaction to going deeper on operational expertise.
Well, I mean, you talked about turnaround specifically. It's interesting, of all the search work we do, and then I'll answer the question specifically, but the biggest uptick is in chief transformation officer. Mm-hmm. That used to be, oh my gosh, the company's in trouble. How do I solve it? Bring in a CTO, and we're going to set up the PMO, and we're going to just really turn this thing around.
Yeah,
I found that probably 80% of the CTOs that we're putting into place are in companies that are not in distress.
Yeah.
But they have to execute on a game plan to transform, meaning improve, increase real growth. So the issue is that everything looks easy in Excel. I love Excel. It's all you have to do is make an exception, to sort of the rules, and sort of figure out, like, I'm going to assume A, or I'm going to assume B, or I'm going to assume C. All right. The problem is you forget about integration. You forget about how hard it is to actually execute on those things. So the chief transformation officer, or transformation officers generally, need to happen. And in a transformation, 95% of the work that's being done is being done by the same people that are there already. And so the transformation officer is like, they need to be the Pied Piper of, like, hey, listen, we're going to view the world slightly differently, or we have a game plan, or, the data isn't clean, so let's clean it up.
Well, I would say too, the transformation officer, you don't go to college to become a transformation officer, right? There isn't really a degree. So I would assume some of those people come from McKinsey or consulting firms that kind of come out and, look at the efficiencies and reduce cost and optimize. But, there's a role that's been around for a little while. I mean, it's not new anymore, but it's product manager. So they come in. I used to work in product, years ago. And I think they're really important, because if you got a bunch of engineers in the room, you hire the CTO of IBM to now join your company, right? Because you're going to give them $1 million salary. The CTO is probably just going to take marching orders from the CEO. And there's maybe the business that tells them to add a bunch of features. And they're probably features that nobody cares about, right? The business is kind of trying to close a deal. They're over-promising, and they just tell the engineers to build it, and then the engineers just go out and build it. But the product manager, in my opinion, has been super important, and many of them have evolved to kind of doing, they work in jobs in digital transformation. But the product person is, asking maybe why 5 times, right? The business is like, hey, we need to add this technology onto BlackBerry. Okay, well, why do you want it on BlackBerry? And you realize that if you get to the question, which is how many people are actually using BlackBerry, and how many sales have you gotten from BlackBerry? If that's actually 0, then it's kind of that transformation officer to kind of prioritize, as you said, right? Like few glasses full, and those full glasses are like high in impact. So I totally agree with you. I think just really trying to come out and transform the right things versus just kind of having a bunch of technical people do technical work that doesn't create any impact. And then there was one other thing that I want to hear your reaction to. So there was something in my feed that I saw recently where there was a hotel that hired a bunch of McKinsey people. Those McKinsey people came in and they said, hey, we're going to cut a bunch of costs. We're going to, increase the revenue, and we're going to cut the doorman, right? The doorman is taking up a bunch of the revenue here. We're giving the doorman pension. We're giving him a salary. We're giving him a bonus. And we're going to automate everything with just digital sensors and doors and security. And it's all automated. It's all powered with AI. And the hotel tanked. And what you realize is the value is not really in saving maybe a couple $100,000 in firing the doorman. The experience and the actual value was from having the doorman. And, that value you can't really calculate, right? But there's an intrinsic value when you come into a building. That's that luxury experience of having somebody greet you. They're dressed up nice. You kind of get that VIP white glove service, which you can't really calculate, right? But that actually intrinsically, it tracks the customer base and it gives them that elevated feeling. But anyways, I'll stop right there. I just wanted to hear some of your reactions to some of those comments.
Listen, I think you're sort of making the point of why we built this business is that operations trump financial engineering. Like the bean counters of the world will say, let's get rid of that doorman. $200,000, sweet. That'll go right to the bottom line, right to EBITDA. It's gonna be amazing. Sure. The operator will say, wait a minute, there's an experience here that he or she is the doorman or is providing. Same thing like any industry, like like car wash, right? Everyone's got a car wash business, it feels like now. And so guess what's important? Like, the throughput's important, but there's a psychology that if you have four prices, you can have the low price, the better than price, the amazing price, the premier price. You pick which car wash you want. And there's a whole psychology of where the mind goes to. And they often go to the second cheapest. So then let's price it in a way that same thing with any business. There's inherent knowledge that someone has spent 20, 30 years burning calories and, thinking about that industry. They're going to know. So just because it makes sense in the numbers doesn't mean that's the right thing to do.
Sure.
That is the key to all of this is making sure you understand. And to your point about the product manager, like how many times does the salesman say, hey, what do you need? Oh yeah, we can definitely do that. Then they go to the engineer and the team, like, guess what we need? And it's one off.
Yeah.
Or is it leverageable? Have we thought about strategy and vision, understanding consumer needs, cross-functional collaboration, prioritization, all the things that they do?
Yeah.
Maybe they have, maybe they haven't. So you need to be thoughtful about, at the end of the day, I always say, not all revenue dollars are created equal. You got to think about profitability. So just because you add 10, 20, 50, $100 million, respectfully, who cares if the margin or profitability of that revenue dollar isn't optimized?
What are some of the skill sets or backgrounds that you normally see with someone who's an operating partner or a transformation officer, and how can people kind of, maybe pivot into that role? Because there's no degree in venture capital, private equity, investment banking, operating partners. So you got to kind of come from somewhere. So what are some of the trends that you're seeing with those kind of roles, especially at the leadership roles that pay really well?
Yeah, well, so for those roles, there's often what we call, to quote a bad movie or funny movie back in the day, Back to School, the triple Lindy. What does that mean? Like the best of those folks, operating partners and transformation officers, often get started as a consultant. And then they transition into an actual P&L role because they have to own the decisions, not just give advice.
Sure.
And if they can then third touch private equity either in some way, maybe the asset that was owned was PE or, so if you have all three of those things, you're in a great position. Yeah. But I say both of those, whether it's operating partner or transformation officer, you need to control, convince, encourage, entice, collaborate. Whereas a CEO hits you with a stick. I'm being sarcastic, but like you need to win the hearts and minds of folks as opposed to just tell them what to do. And they're very different. They're both equally important, but it's rare that someone can do both.
Sure.
The best ones can, but that's very unusual.
Yeah. So, there's an attorney I know, and he was just talking about something that he was dealing with. And he was like, look, you can either do the stick or the carrot, right? So walk me through that in terms of leadership styles, right? So CEOs, when you think about the stick, it's like, hey, you know what? If you don't do this, you're going to get punished. You're going to get fired. Or, hey, we're going to come after you to do something. And then obviously the carrot is like, hey, do this. And if you do this, we'll give you this, right? So we'll give you that next bonus, or we'll give you that extra incentive. So what are your thoughts on just both of those mindsets with leadership? Is there one that works, or does it depend?
Yeah,
I would love to hear
the annoying answer, which is always the right one, is it depends.
Yeah.
The more helpful answer is, so I did a study once where it was a couple hundred people. Why did they leave their job?
Sure.
And by like 3 orders of magnitude more, it wasn't more pay as the real catalyst.
Sure.
Because like that's the carrot thing, or if you don't do it, it's a stick thing. You don't get the pay. The number one reason why people leave is they don't think their boss, whoever that is, the board, the CEO, line manager, whatever, is helping them progress professionally.
Yeah.
Right? They're like, I'm doing you a favor by letting you work for me. Versus you're good at this. You have a goal to go to here. How do you progress? How do I give you more rope? The problem is that's tiring, painful, for the manager to do, because you can't do that for hundreds. You can only do it for your direct reports. But I would say of all the things that management can do, it's not just lip servicing, but proving that they are helping their direct reports get better and grow professionally. The money matters. I'm not saying this is a philanthropic exercise working. But what matters is that belief that I'm like, this person's got my back and it's helping me grow.
I mean, it's difficult now too, because it's, with so much transformation, there's changes, jobs are getting replaced with AI, especially on the tech side. And then also jobs are getting outsourced, even white collar jobs, like CPAs, attorneys, a lot of those are getting outsourced to India. There's a fund admin that I know, their entire operations is in India for a fraction of their cost, so they can increase their margin. So what I've seen is that senior leaders at some point start almost competing with their direct reports. And like, I felt that in the past. It's been a while since I've worked in corporate America, but I've been in toxic situations where I felt like my boss was like taking away my work, and I was competing with him as a peer. So I don't know what your thoughts are on that, especially with your position here, seeing a lot of senior leaders and obviously hearing tons and tons of people unhappy with their jobs, looking for a next step. Don't know if that's ever come up before, that kind of weird dynamic where there's a little bit of competition.
Yeah, well, listen, it comes down to the word that rhymes with good leadership, which is good leadership. So, like, yes, you don't go in this. I mean, you can get an MBA and all this sort of stuff, but you often get promoted in a job because you're good at something.
Sure.
And then you have more responsibilities. But your job needs to move from being more and more efficient at delivering the result to training, teaching, helping people do what you did. That is hard to do for some people, to let go and then learn again, and let go and learn again. But the best managers, if they see leader A competing with subordinate B, that leader's wrong. And they need to be either helped to focus on what's more important on growing a company, but not competing. Now, there's a job security concern with folks. They're like, oh, if I don't do this job, if I let my cheaper person that works for me do the job, then I'm no longer needed.
Sure. Yeah.
That is incredibly short.
It's a huge issue. Yeah.
Right. But that's the wrong leader then. That person needs to move up and say, here are other things I can do. And I'm going to look better when I have people working for me doing my job efficiently. So that's finding the right leadership. And the person who's above that person needs to do it. And the person who's running the company needs to do it. So the hard part for everyone who's meandering through that leadership sort of continuum, if it's not the right spot and you're not getting the right support and you are seeing what you suggested, it's probably the wrong spot.
Sure. No, I agree. I mean, what are your thoughts on the player coach? So, there are some organizations where they have a culture. It's kind of like a flat culture where you're a coach, but you also own some type of responsibility. Do you think it's better to just be the coach only? Or do you think there's instances where it makes sense where a leader also kind of has his own project that he owns as an individual contributor?
Yeah, I think about, teams I've played on with, the player coach mentality, right? There's fewer of those these days, but it was more common back in the day. But does that player coach keep calling his or her number or plays for them?
Sure.
Or are they thinking about the greater good of the team? So as long as the mindset is where are we trying to get to, and if I'm the player coach, I am a part of that solution.
Yeah.
Versus I'm keeping myself busy and paying myself and suggesting that I can do all the cool stuff and letting all the other people do the lower latency, less stuff. That's not the right person. So, I think your job is continually to make yourself obsolete. If you're doing it right. And if you are, you're finding other ways as you increase your position in an organization to create value and provide guidance and bring people up with you. Because that it engenders a lot of trust, it engenders a lot of loyalty, it engenders a good culture. But again, not all companies are the same, not all leaders are the same, right? So going back to private equity and institutional ownership, they need to, that's part of the assessment of do I buy the asset? So most of the time is it generating free cash flow? Is it generating returns? I get it. You need to make money for sure. But is the culture and the institution one that's going to engender that sort of growth? Because if it isn't, it may not be the right business to buy. And from a leadership standpoint or employee standpoint, you have to know that what your worth is. It's not a good position. You got to take the uncomfortable reality of finding that next gig and attaching yourself to a leader who views it as us, not me versus you.
Yeah, absolutely. What do you think it takes for somebody to scale from maybe close to 7 figures to multiple 7 figures? And then what do you think you've seen does it take to get to 8 figures with a private equity backed company?
It's rarely the same person to use in similar but different parlance. Like the person who goes from napkin stage to 5 or 6 of EBITDA is a different person often, not always, often to take it from 5, 6 up to 25, 30. And guess what? Same thing. Take it from 25, 30 is a different skill to get to 75 to 100. And you can continue that on. So one's not better, one's not worse. They're just different because the person from napkin stage to 5 is borderline like maniacal about super optimistic and like this is going to be amazing. And they are the CEO and sometimes CFO and CTO and CMO and CRO. And they're like, they are the driving force for creating value. But to your point just earlier, the person who takes it to the next level needs to delegate and they need to collaborate because you can't micromanage as the company continues to grow.
Yeah, no, absolutely. Let's talk a little more about, I feel like it would be really great to know a little more about Lancor, some of your clients, and how you work with them on both sides, with the talent side and then also with the opportunity side, right? The firms that are looking to find talent, maybe talking through maybe the history of the firm and then I guess, how you service both sides of the marketplace.
Yeah, well, I think the key to it is, as we were saying throughout this conversation, it's all about leadership and all about we call them 5%ers, Lancor 5%ers. Who are the best executives? And then how do we sort of work with them? The problem with search in my opinion, just generic search, it's a bad business model.
Mm-hmm.
I've got one arrow in my quiver, and it's to trick you to move to Memphis and to take this job. Bro. Memphis is awesome, actually, but
Sure.
like maybe not if you live in Cleveland. I don't know, wherever.
Yeah.
So that what we're doing is we're saying, listen, on the one hand, we're doing 120 searches a year for PE firms. So like, we got tons of stuff to talk about. So if this role on the search is important to you, interesting to you, let's talk about it. But if it isn't, here's like 7 other things we could do. So for example, if I'm talking to you about taking a CEO role and you're like, Scott, I love the business you're talking about, but I'm going to sell this business in 9 months. Most search people say, oh, it's too bad. Joel doesn't want the job. What we hear is, we're selling the business in 9 months. Awesome. So let's go figure out who the right buyer could be.
Yeah.
Right?
So you can also help strategically with thinking about buyers, because when you do that, there's a whole team of recruitment that you have to kind of handle as well, which I think is kind of a great funnel. Yeah.
Right.
But it's also great to kind of, it's great to hear that you have a lot of, kind of investment banking, private equity chops, from your previous world on, in finance and high finance specifically. But that sounds like that's the key, kind of really strategically, holistically, not just filling in slots, but saying, hey, you know what, let's actually figure out what your goals are. You want to sell your company. What after that? What's kind of the next step?
That's right. I mean,
maybe you could be a board member. You could, think about your next venture. So there's a lot of other things for a soft landing for the person that sells as well.
Yeah, we closed 10 deals last year. Closed 10 proprietary, the unicorns that never exist, proprietary deals last year, because we talk about executive A, about opportunity B.
Sure.
And the answer is often don't buy it for all the reasons you don't buy a company. That's usually the right answer, unfortunately, in M&A. But then we say, all right, you're so smart in fire and life safety and landscaping and MSPs and in sort of asset-light logistics, whatever. What would you do, executive A? Here's a bunch of companies that we track, 15,000 of them. Let's cut it by industry and size and scale and scope and geography. Which of these what's the headwinds, the tailwinds, the systemic? Where are the bones here?
Sure.
Now we're bringing that idea and that executive to a PE firm and saying, I've got an asset, it's coming to market. I got an executive, he or she used to run it. We've got an angle, it's proprietary. You want to hear about it? And they're like, yeah, of course I do. Like, what are you talking about? So that is super meaningful, because now that executive can showcase his or her ability to create value, and they can pick the PE firm that best aligns with them, as opposed to the search side, which is the exact opposite. Here's 100 people that could run your business that you need. Which do you think is best? They both are valuable, but one's way more valuable for the PE firm. One's way more valuable for the executive. So to be able to change the world of M&A, which is, it's Friday, so we can be delusional with our capabilities in life. We're changing the world of M&A, which is a big goal. It's what we teach up at Columbia Business School. It's what all those different things is. You need to be smarter about what to do before you own it, not just sort of look at the model and try and figure it out.
Sure, absolutely. From the talent perspective, tell me about the bar. Tell me about some of the different roles that you like to hire for, and what it takes to kind of outperform in those interviews, and especially stand out, right? There's one role and there's maybe 200 people applying to the role. So how do you become the best candidate to essentially win the job offer?
Well, let's be clear. Skills to do whatever the job is, because CMO and CTO and CRO and CEO are all different, right? So of course you have to have the skills, full stop. But assuming that is the case, the two things that matter most: 1, intellectual curiosity, and 2, humility. Those do not go together often.
Sure.
But when they do, it is an awesome leading indicator of top decile investing, because everything you're working on, by definition, it's hard to jam into a historic playbook.
Sure.
Like, just follow chapter 1, the chapter. So the curiosity is trying to figure out, constantly bringing in people, not being afraid of bringing in independent board directors, other C-suite executives that are better, smarter, more experienced in certain areas than you.
Sure.
So that's the intellectual curiosity. And the humility is knowing that although historically you've crushed it because you're a good executive, you don't know everything.
Mm-hmm.
And so those two things, there are sometimes opposing mindsets or views, but when you have them both and you can articulate that in your interview, like, listen, I don't know all the answers to every question, but listen, at A, I did B. At C, I did D. And to produce these results, and you've had this issue with this company that you want me to run or whatever, like, it seems to me I would explore these as sort of the initial output. Like, the interviewer's like, oh, amazing. All right, well, tell me more about that. As opposed to, I did this, I did that. You need we. Of course you did it. You're running it. But like the mindset needs to be we collaborate. Right? That sort of thing in your interview. And when you do that, everyone thinks they have to come off as like the best thing since sliced bread.
Sure.
That'll come out in the capabilities, in the results. When it comes out and talking about how great you are, people are like,
So I think you're right on the mark here. I mean, there's the table stakes, which is kind of the hard skills, the technical skills, having them hear what they want to hear. But then I think really that additional piece of character is those two pieces that you mentioned. What about storytelling? So, obviously when they ask you a question in terms of how you handle the situation, what have you seen in terms of storytelling that has been successful? I'm assuming it's like some data, right? Some kind of measurable, like maybe you started here. It's like three things, right? We were here and then I did these things and then these are some of the metrics, but would love to hear some of your experiences in terms of like just the people that were able to communicate the best, right?
Yeah. Well, I think it's funny. I was talking to someone and we talk about intellectual curiosity, humility, etc. But storytelling is something that is incredibly important, but it's how you tell the story to your
Sure.
So you need to be, again, transparent and honest and all those things. But it's like, hey, when I started at X, here was the problem. And so you never get 100% of it right the first go. So we did A, B, and C. And guess what? We accomplished 60% of our goals. Fine. So then we have to say, all right, well, how do we get the next 40? We had to think and like, all right, well, we decided to do A and B. And guess what? We got another 50% of that remaining 40%. So now we got 80% of it. And then we did this. And so but you can say that in 30 to 45 seconds, not 5 minutes.
Sure.
Because people are often talking and listening to themselves talking. I'm keep talking and let me keep. It has to be pithy. Like, be comfortable, but sort of thoughtful about that. So that would be my suggestion on being a good storyteller. Here's what I'm going to tell you. Here's me telling you. Here's what I told you. It's like what you learn in your like third grade writing a paragraph, like opening sentence and then the meat of it and then the closing sentence. But it's got to be precise. If you can say it in 3 minutes versus 4, better. If you can say it in 2 versus 3, better. And it is too little, but allowing the person you'd be working with or who's interviewing you to actually ask questions.
Sure.
On that's important.
No, absolutely. On the talent side, we talked about kind of what motivates people to leave. What motivates people to join an organization? Because, I mean, it's a two-way street, right? So the hiring managers obviously are trying to find the best talent with those two characteristics that you mentioned. Plus, they kind of have to fulfill what's listed in the job responsibility, right? But what have you seen that's been helpful for two things, right? The company to attract talent, but then also retain them. Google was, famous for what? Like giving free coconut water and free breakfast, lunches, and dinners. Is that really what retains people these days? Or what is it now that you think you're seeing, especially in the private equity space, that attracts people and then retains them and what does retention mean? Does that mean 18 months? Does that mean 3 years? What's good retention?
So I'll reverse order it just because it's easier to remember. So retention means what happens is, if it's PE anyway, the beauty of PE is you have to sell it, right? Because you have to give the money back to the LPs that gave you the money in the first place. the goal would be to stay through an exit, because then you can see it from soup to nuts. So that's now. Do you want to take another bite of the apple with the new owner? Maybe not. Like, doesn't matter. You can choose that. But if you can stay through the exit, that is super meaningful.
Sure.
What's motivating? I think the motivating part, of course, it's economics, right? Everyone wants to make money and be rewarded for but I think it's not just making an extra dollar, but I find the equity part is super important, because I'm not going to work just 9 to 5. If I'm not making a salary or whatever, like, okay, I'll work 9 to 5. But if I'm getting equity, even if it's one share of equity, I'm going to work from 8 to 6 or on the weekend, whatever it is, because I'm trying to build the enterprise value of the entity. So therefore, to your point, when you're hiring someone, you need to get them, I think best practice is getting them to buy into the growth of the entity, not just accomplishing your job.
Yeah.
Because what's going to happen, I mean, even in finance, which is the most, could be viewed as the most rear view mirror, reporting the news, did we make $1 or not? The best CFOs of the world are going 2 or 3 layers into an organization and being viewed not as the police or whatever, like stop spending money on pens or, whatever the number. It's what are we measuring? And if we're clear on the 2 to 3 goals of our ownership period, right, not 10 number one priorities, the CFOs even are asking, all right, guys, are we measuring the right stuff? And often it's the VPs or the associates even, they're like, hey, wait a minute, if we're trying to accomplish A, we shouldn't be measuring B. We should be measuring C. We should be thinking about B. That is what you need, right? And so empowering that and knowing that's part of the goal is what attracts people. So yes, money is important, and yes, enterprise value growth is important, but feeling part of that team and being having a sense of a mission is better than just showing up to do your job, clocking in and moving on.
Sure. So the flip side, how can leaders build culture? Beyond just doing an offsite, beyond going out for cocktails, how do you actually build that culture?
Yeah, I think they need to be able to understand why it's important. Say culture eats strategy for breakfast. So like you need to really have everyone on the same page to really create value. But that takes, people go to undergrad, people go to graduate school, people get varying degrees. The learning process, intellectual curiosity coming back, never ends. You've got to constantly, as a leader, be thoughtful about how to improve your leadership capabilities.
Yeah.
And part of that is building culture. So it doesn't just magically happen. And like going out for drinks is lovely. Like, okay, but like, and not that you need to be overly Machiavellian about it. Like, I'm going out for drinks, but my secret alternative motive is there's a balance of it all. So that learning needs to continue with the leadership team to build that culture.
Sure.
And there's lots of ways to do that. Come back to the independent board director, right? Who do you admire? Maybe you don't need the go-to-market motions of a strategic help that you would, but maybe you have an independent board director who's killer at building culture. Awesome. There you go, right?
Sure.
So what do we need to focus on, and how do we get people to help us get smarter, better, more efficient?
Sure. Absolutely. Well, hey, Scott, this was really amazing. Thank you for educating us all on just the private equity space. I mean, how to really think strategically from a board perspective. I think also just engineering the exit, right? Thinking through that pathway to an exit, but then also after an exit, having a soft landing to kind of whatever your next destination is. So it's super interesting. And I think it's a dynamic industry. I think things are changing and expectations are changing, but I think it's also increasingly more difficult to generate higher multiples of EBITDA. So leveraging AI technology transformation is getting us there. And it's going to be interesting how that's going to evolve over time. So look forward to staying close with you on all of these things, because you're right on the pulse, and appreciate all that you do for the community, obviously helping, executives really grow and scale themselves, but then also helping companies eventually become 8, 9, 10-figure businesses. So appreciate it.
Yeah, well, listen, thanks for having me on. And it's nice to sort of, to your point, whether it's not overly philanthropic, we're making companies more efficient and making more money, but there's elements of it that are important too with teaching and trying to help. So when I'm perfect, I'll let you know, but it's nice to be on, and hopefully someone will get a nugget here or there, what you and I talked about.
Yeah, well, I'll say too, it's like, it's, you gotta, if you want to do good, you have to do good, right? So you have to actually have a successful company. You need capital to create impact. If you don't have any capital, you have all these good intentions, but there's not really much you can do, right? Because you don't have the resources to do it. So you know what, maybe you can leave us with one nugget of wisdom. You left so many, throughout this episode, but if you're to leave one piece of advice, it could be from a family member, it could be from a past manager or a mentor. Would love to, take away something from that.
Yeah, I mean, it's really sort of the nerd out thought process, meaning read, right? I love saying, what are you reading right now? It's that curiosity thing.
Sure.
Like, history repeats itself to some degree, but how do you find people in your life that are equally curious and spend time and learn from what they've learned and read what they're reading? Because the problem with all of us is we get older.
Sure.
We become more of a mentor. I look around like, wait a minute, when did I become the mentor? Aren't I still 22 years old? And the answer is no, or not 32 or 42, whatever. So you end up trying to surround yourself with people that are equally as curious, read a bunch, and that's going to help you ingest and make better decisions. That's my thought.
Yeah, absolutely. Well, great. Well, hey, everybody, have a great, Friday. And Scott, thanks for everything. We'll catch up soon, hopefully in person.
You got it, man. See ya. Thanks.
Take care. Bye.